Hey everyone, welcome back to POA for you. It's Leroy again, and today we are going to go through the O Levels 2021 paper 2, question 3. Topic is on financial statements analysis. Now, before we start, if you've got a friend who you think can benefit from this video, please share it with them. Free resource for everybody. Alright, let's jump right into it. Okay, so we have two businesses, Tasty Cakes and Fancy Gâteau, and these are some financial information we have from them, and they've asked us to calculate in two decimal places gross profit margins and profit margins. Now, for financial ratios, you need to memorize this, right? And in your syllabus outline, there are formulas for that to memorize it. If you don't know where your syllabus outlines are, go Google the 7087 syllabus, and at the end of the pages, the end of that syllabus document, they have all the different financial ratios. So please memorize them. But anything that has asked you for something, gross profit margins or profit margins, the denominator is always net sales revenues. So that's a method where you could help yourself remember this. Okay, so let's take a look what the answer that I prepared for you on this. So we have two businesses. The understanding the formula for gross profit margins is simply gross profit, like the first word, gross profit, divided by what net sales revenues, because margins would imply net sales revenues. So if you remember it that way, then you could even know the formula by looking at what the description of that ratio is, right? So gross profit on the numerator, margins would imply net sales revenues. So what I've got is gross profit. You need to know how to calculate gross profits, right? So it's basically sales revenues minus cost of sales, and that's 68,000 minus 44,000 and divided by 68,000 being the net sales revenues. Now in this case, there's no I say net sales revenues because in some cases sales revenues less, or rather sales revenues less sales returns equals to net sales revenues, and in this case there's no sales returns, so sales revenues equals to net sales revenues since there's no sales returns, right? I put in the formula here as well. And for Fancy Gâteau, it's 92 minus 53 and divided by 92. So it's very simple, straightforward 2-mark question, or actually 2-mark question for gross profit margins, and you need to know the formula to get this. The next thing, profit margin, profit of the business divided by the net sales revenues. And how do you calculate profits? Profits is basically the residual profit, right? Gross profit is the profits from selling just the product itself, and profits, at the end, the residual profits is taking into account all the indirect costs, and typically we know that as expenses here. So in my formula here, you take 68 minus 44 minus 9,500 and divided by 68 for Tasty Cakes, and vice versa and similarly for Fancy Gâteau, I got to add in 22,400 here, and this is your formula. Let's see whether I actually, I did it in here. So these are the two margins, percentages, and that's it, 4 marks for you. All right, let's take a pause at this point in time and really try and understand what profit margins and gross profit margins are telling us. Let's start with profit margins first. Profit margins is essentially saying that, out of $100 that I sell of cakes, the profits that I derive from this after deducting direct costs and indirect costs, and direct costs is the cost of your cakes. Indirect costs is things like salaries, rental, utilities, electricity, and stuff like that. Out of the $100 of sales that I make, my profits would be $21 after deducting this for Tasty Cakes, and Fancy Gâteau would be about $18. So who is more profitable in that sense, and from a which is a more profitable business at the end of the day? It would be Tasty Cakes, $21. Okay. Now let's look at gross profit margins. What's the difference between that and profit margins? Gross profit margin only takes into account direct costs. So it's $100 worth of cakes that you sell less the cost of the cakes only. Okay, so if I look at that, $100 worth of cakes that I sell less the cost of the cakes, for Tasty Cakes, that profit is $35, which, if you think about it, it implies that the cost of the direct cost of the cakes is $65. Because if I sell $100 of the cakes and my profit is $35, my gross profit is $35, it means that my cost of goods sold is about $65. So that's what this percentage means. On the other hand, Fancy Gâteau, its gross profit margins is $42, which implies that the cost of sales is about $58. So the cost is cheaper than Tasty Cakes in this case, the direct cost. So the cost of the cakes is cheaper. And I'll explain to you a bit what the implications of this is in the later part of the questions. All right, but let's move on at this point in time to the next part of the question. Evaluate the profitability of Tasty Cakes and Fancy Gâteau. Okay, so let's see what I have. Evaluate. This is a 6 marks question, so I'm going to give it a bit more weight. I'm going to kind of structure my answer from a sense of observe, what's my observation, and why do I observe this from the numbers that I see here, and a few recommendations. Okay, so let's kind of go into this. What's the observation? Fancy Gâteau has better gross margin than Tasty Cakes, but generate less profits due to higher indirect costs. So let's go back to this, right? I'm gonna put this here. So if you look at Fancy, let me try and put it in one page. Let's see, I can get it there. Yep, I can do it there. Fancy Gâteau gross margins is 42%, right? If you recall here, and Tasty Cake is 35%. And although they start out at a better margin rate than Tasty Cake, their ultimate profit margin is lower than Tasty Cake. And that's because in between this and this is indirect expense. And indirect expense would include things like salaries, rental, utilities, and stuff like that. So it would mean that for Fancy Gâteau, its indirect cost, it's much higher than Tasty Cake because it starts off at a gross profit margins is higher, but ends up at a profit margin that is lower. So in between gross profit and profit margin is expenses. And the different type of expenses could be, utilities, rental, and salary, right? So that's the observation. Let's look at, the justification. And this really, I've said that Fancy Gâteau may be more efficient at baking cakes, or maybe could buy its cake at a lower cost, but lower profit margin would indicate that it has a higher operating cost. So it's maybe paying a much higher rental than and salaries compared to Tasty Cakes, right? So what could it do as a recommendation, right? So let's see. So as a recommendation, Fancy Gâteau could improve its profitability by reducing operating costs, right? It could try and negotiate lower rental or move to a cheaper location. So maybe it's in the heart of the city right now, and maybe it could move to the heartlands, for example, to get a lower cost. And let's see what I've commented on Tasty Cakes. It could improve its profitability by improving its efficiency in baking cakes, so reducing its direct costs, because we know that its direct cost is much higher than Fancy Gâteau. So it could, have more automation in the production process, because that usually reduces cost for any production process, or it could negotiate cheaper, better purchasing rates when purchasing raw materials and stuff in making the cakes. Okay. All right, so what's the next part of the question? So the next part of the question, Xander is considering investing in either one of these businesses. And we're supposed to recommend which one they should invest in, using, of course, all this information, and explain, of course, why, right? And then the next part is explain the importance of profitability to the business. So let's look at the first part of that first. Which business would I recommend Xander to invest in? Let me pull in. All right. I would say that if Xander can influence how the business is managed, then I would advise Xander to invest in Fancy Gâteau. Now let's look at Fancy Gâteau first, right? I say this because Fancy Gâteau starts at a very high gross margins. So the starting point is it's like it's a better step into profitability than Tasty Cake. And this may mean a few things: that Fancy Couture can command a higher selling price because it's got a better product, it's got better branding than Tasty Cakes, and therefore it can price a bit higher. So for example, if if we buy things sometimes, and if something has that brand of something is a bit more solid and robust, then normally they charge a bit higher and we would still pay for that. And Fancy Couture may be in that position. And although Fancy Couture's overall profits is still lower, but if Xander has an influence over the business, then Xander is able to go in and make some decisions on, hey, let's look at cheaper pricing for rental. Let's look at the way we spend on salaries and benefit. Do we need so many people in the shop? As an example. So I think that's something that I believe would be helpful from deciding which business to invest in. So take a look at my write-up here, and essentially what I've just mentioned. The next thing is explain the importance of profitability to the business. Now, profitability to the business, it's key, right? Ultimately, if you're in a business, you want to make profits, and that would help you continue with the business on an ongoing basis. But there are some important things that profits would help with generating. It gives you the ammunition to do a lot of things, like reinvest in advertising so that more of your consumers know about you and have a good impression of the business. It helps you give your shareholders dividends, or give your shareholders, the share of the pie, and your shareholders would be then happy because they are getting dividends and getting a part of that profits, so they would continue to want to invest. And it would also attract new businesses to new investors, to invest in your business, because you have a good track record of profits. And if you want to get more investors to join your business, they would look at your profitability and say, oh, this is a good business, and so therefore I want to be part of that, right? Other things is, when you reach out for a bank for loan as well, a bank looking at your profitability will be more likely to want to lend to you than not. Okay, so that is it, and I hope that this has been helpful for you. If you have any questions, please feel free to write to me, and if you have any question paper that you want me to try and answer as well, I will give it a shot, and just send them to me in my email via this channel, and we can take it from there. All right, take care, good luck, thank you.